All right, everyone, welcome back to the channel. And in this video, we're going to be going over a bunch of different concepts, right? That all come into one thing together that we title as smart money concepts. Okay, so we have supply and demand, there's liquidity, okay, there's Wyckoff and a few other things, but those are the main three that we're going to be going into. Okay, so supply and demand, liquidity, okay, and liquidity engineering, as well as Wyckoff and Wyckoffian theory. Okay, now this is going to be like kind of a beginner's course into smart money trading. Okay, for smart money trading and smart money concepts. So I want to go over a few things, and I want to just lay down the foundations for you for all those people who come into my group and or are looking to join my premium group, where 95% of my time is spent, okay, mentoring the students and I'm sending those setups out, right? Just kind of trading with my students. They're asking member to mentor questions in the Telegram group chat. Okay, so it's actually a great way to be a part of a community. And if that sounds like something you're interested in, just click the link in the description. You can purchase premium for just a one-time purchase, or you can choose to pay monthly. Okay, the one-time purchase is priced at 200 USD as it is. Okay, and I think that's a low ball. Honestly, I think it's a great deal. So in terms of for what you get by joining premium and all the content, right? We do weekly Zoom calls. We also do just a whole bunch of other things, right? It's basically just one big mentorship. And I look forward to, in the near future, maybe launching something on Discord. Okay, so it's more organized. There'll be a bunch of different rooms, right? I'm putting together a course as we speak. So this should be a lot of fun in the future. So if that sounds like something you're interested in, join the premium. The link is down below in the description. Okay, so starting off with the foundation and the pattern that we trade. Okay, there's one singular thing that is the foundation for every single trade we take. Okay, and it's this: there's an area of consolidation. Okay, and then there's a big impulse in price, right? So this inefficiency is created. So we have an area of consolidation here, and then we have a nice push to the upside. Okay, and this coming back down into our area of interest somewhere around here, okay, is the foundation for which all of my trades are taken. Okay, so this right here, this pattern, you will see on every single one of my setups, okay, and vice versa. If we are selling, right, you have an area of consolidation, you have a move to the upside, maybe clearing some kind of creating, again, this one big inefficiency that price needs to fill in, okay? So what happens up here? Okay, so as soon as price makes this area of consolidation, okay, and if you are a retail trader, understand that all of your concepts are completely contrary to what I teach and how we trade in smart money concepts, okay? So we are targeting things like support and resistance. We are targeting areas of support turn resistance, resistance turn support. We are targeting trend lines. We are targeting all retail notions that you have been trading this whole entire time. Okay, so we are actually getting in when you are stopping out. Okay, so if this makes sense, we are aiming to take your money, okay, and then eventually leave, right? Go to the downside, go to the upside, whatever. All you need to know is that everything that you've ever learned regarding retail notions and retail concepts is going to be completely obliterated by this video. Okay, so by your introduction into smart money. Okay, so as we have this area consolidation, and we're going to go over it into live chart examples. Okay, we have this nice move to the upside. Okay, so what happens in this move to the upside, right? That clears liquidity sitting up here, retail resistance. Okay, once we have this move to the upside, all of the stop losses sitting up here at equal highs, at double tops, at triple tops or triple bottoms. Okay, double bottoms is taken. Okay, so if you are a retail trader, right, you would be looking at this as a double top. Okay, and then you would be looking at this as a triple top. Okay, we are waiting for the liquidity to be taken. Okay, once the liquidity is taken, right, what's resting up here above these equal highs, above this double top? Money. Okay, so this is where the liquidity is. There's these stop losses from retail traders. If you're a retail trader, this is where your stop loss goes. Okay, also our buy stops. Okay, when the market breaks out of this area known as resistance, your buy stop is going to be triggered. Okay, and then your stop loss is going to go somewhere down here. Okay, so as soon as smart money makes its move to the upside, right, or the composite man that we're speaking about, right, the big banks, this algorithm that we are all trading and trying to ride the coattail of, makes this move to the upside. Stop losses are cleared, buy stops are triggered, and then what do you know? Okay, everyone gets screwed out of the market. Okay, now you might be also looking at the buy that comes here. Okay, so you have a buy stop set. Well, you say, okay, I got stopped out. Maybe this is just a break and retest to this support. I mean, to this resistance now turned into support time. The market is just going to shoot straight down and stop you out all around. Okay, this lays the foundation for every single trade that we take. Okay, so After liquidity is taken from above here, okay, smart money buys in heavily, okay? In order for smart money to always win, right, the composite man always needs to win. The composite man always needs to clear all the money. They are in this business is made so that we lose money. Okay, that is just the bottom line. This is an algorithm that was made to take your money as a retail trader, as just wherever you are. There's billions of dollars in this. Okay, and the market was made to take your money. This market is 100% manipulated and controlled. Okay, so first you need to just believe that, and if you don't, feel free to leave the video, feel free to leave my channel, unsubscribe to whatever, but this market is 100% manipulated and controlled. Okay, so as smart money buys to the upside here heavily to clear liquidity from all retail traders, what they do is then they sell heavy, right? Because once the buy side liquidity is taken, there's nowhere else to go. Okay, except the sell side. Okay, down here, once buy side liquidity is cleared, we understand that the only place for the market to go next is to take the sell side liquidity. Again, going back to the original point, all the liquidity needs to be taken, all the money, all the orders need to be collected. Okay, that's how the algorithm makes money. Okay, so once they buy heavy, they sell off heavily. Okay, now we understand that these buys that the composite man made as a false move to go short need to be cleared. Okay, so the market is now negative, right? The composite man is negative when it buys. When it sells. Okay, so they buy heavy, they sell heavy, negative. Okay, they're negative because the market went down. They buy heavy here and they sell heavy here. What do they need to do? They need to come back and collect their money. They need to close out at break even, or maybe even in some profit up here, so that they don't lose money. Okay. Now, once market starts to make its way, let me just get rid of all of this. Once the market starts to make its way up, again, creating what? Trend lines. Okay, creating equal lows, trend lines, bullish engulfing, bearish flags, all these types of patterns, right? To create liquidity to then take. Okay, so as they come back up here into our point of interest, our POI, as we all know it, closing out their negative positions that they bought to mitigate this area, they create liquidity on the way up to take it on the way down. Okay, this is a classic model. This is your buy to sell model. Okay, and this vice versa, obviously, if you are selling, or the sell to buy model, okay, which looks something like this. Okay, creating liquidity all the way to the downside into their positions that they need to close out here at break even or in some profit to take higher, taking all the resting liquidity above this trend line that retail traders trade, right? Break and retest traders, maybe there's some form of equal highs here that it has resting liquidity above it, whatever, you get the point. These two models are the basic foundation for which we trade. This is it. There's nothing more to it. Okay, now, right, easier said than done. Obviously, I make it sound a lot more easier than it is. But if you look at my setups and you've been following me for a while, every single trade has this foundation, has this picture in some way, shape, or form, right? Now, this, as we start to get into, as we start to make our way up into, right, our point of interest, which is where smart money needs to, or the composite man needs to mitigate his negative buy positions. As we start to make our way up in here, we're looking for one thing. Again, these are the foundations. This is the basic. We're looking for one thing, okay? And it's called a QM pattern, okay? It's a high that is taken by another high that has a change in character, or a break in market structure. Break in market structure and change in character a little bit different. I won't go into that. That is premium content. You have your change in character here, okay? So it's sort of like a head and shoulders, but it's not, because if it was a head and shoulders, you would be selling here. A lot of the times you'll notice smart money will come all the way up into this area to take lower, okay? So let me just move this over again. So let's go over this one more time, okay? So you have your area of consolidation. You have your move to the upside. The composite man buys, clears all liquidity resting above equal highs, or a trend line maybe to the downside. All you need to know is that liquidity is cleared here, and you're going to see this. I'm going to show you an example, okay? They sell off, taking what? Equal lows. Again, liquidity. They start to make their way back up into where we are looking to sell, okay? And you're looking for this pattern, okay? This is where you want to get in every single time. Now, this high on a lower time frame might look something like this. Okay. And that is called Wyckoff. Okay. This is these are distribution and accumulation schematics. This is all engineered liquidity. So if you want to learn how to spot something like this, again, I'm going to tag my premium. You'll learn everything about Wyckoff. You'll learn everything about what goes on inside of this area that we are always looking to sell off of or to buy off of. Okay. So there's a lot more that goes into this than just the QM, but in short, this is the pattern. Okay. Like I said, this high might look something like this. Okay. This high also might look something like this on a lower time frame. Now that's all Wyckoff. Those are all distribution and accumulation schematics. Again, if you want to learn that, join premium. Okay. So in short, you're looking for an area of consolidation where smart money bought heavily or sold heavily and then pushed in the opposite direction, creating a big imbalance, pushed in the opposite direction, or here, this would be my apologies, pushed in the opposite direction, again, to the upside, creating what this big imbalance, right? Pushing liquidity to the downside here. They bought to the upside. They engineer liquidity. And this is where we look for that pattern. Okay. This is where we look to buy in again on the selling side, creating engineered liquidity. We want to get in somewhere around here looking for that pattern. Okay. And this is the only way that makes sense. Okay. So if you look at supply and demand and, right, you look at, let's just say for a market, for example, okay. Again, things want to be, the composite man wants to buy and sell at premium and discount prices, just like you go to the market and you want to buy something at a discount. Okay. If you want to buy something at a discount, smart money wants to buy something at a discount, right? They clear liquidity to the downside. They make this big area of inefficiency. Okay. If you want to buy something at a discount, you want to buy at a lower price here. You want to be buying at a lower price. The lower the price, the more probable the trade is going to be. Why? Because it's a lower price. Instead of smart money buying in here at 1.13500, somewhere around here, they're going to want to come down to 1.11500 over here to buy. Okay. It's more probable because it's cheaper. This makes sense in the real world. This is how the same thing is applied in Forex. Raw price, no indicators, except for maybe volume, no indicators, pure price action. This is how it works. And what I just described to you about engineered liquidity, about points of interest, about Wyckoff, okay, and about supply and demand, this is what makes this all coming together as what we call smart money concepts, okay? So I hope I was able to clear some things up with that, okay? And I just want to note that, yeah, when we come to efficiency here, okay, this is your point of interest. This candle to the downside, or this couple of candles out your rectangle on TradingView to potentially buy from, okay? Okay, now let's just look at a live example and then wrap this up. Okay? So we can obviously see here that we have equal highs. Again, what happens to these equal highs? They are taken. Okay, so this is just a live market on your USD. You can see the date in the bottom right. You can also see the date in the top left. This is not in hindsight. This is in hindsight. I'm going over this chart in hindsight, but my premium members who see it every single day, it's not in hindsight. Okay, we do live. It's live trading. They follow along with, you know, the trades and the setups that I'm sending. Again, I also described how signals will never work, why they never worked, and why they're not working for you right now. So if you want to join this group for signals, don't even bother contacting me. Do not even bother purchasing the premium mentorship. It is not for signals. You cannot be profitable with signals unless you are over my shoulder 24/7, taking every single trade I take, partialing out every single time I partial out, risking the exact same that I'm risking. Okay. Now in smart money, your loss, right? We always talk about how risk to reward ratio is way more important than win to loss ratio. Okay. So in smart money, you're honestly not even going to have, it's going to be very hard to have above a 40 to 50% win rate. You could have a 15% win rate and still be extremely profitable. Okay. You could lose 10 trades in a week, but that one trade that was low risk, high reward covers up all of those losses that were just minus ones. Okay. So if you have 10 minus ones, but this one trade on Euro USD that you're going to take, or that you take, was a 1 to 28 risk to reward, which is very possible, and it's not absolutely crazy. That is very possible. And we have trades like that all the time in premium. Covers all of those 10 losses and puts you 18% in profit. Okay, so you have minus 10, and then you have a plus 28. You're still very profitable. 18% in a month. We do that in a week sometimes. 3% a month is a great target on a $100,000 account that you can live off of that. That's what the average American citizen lives off of, is 3% on a $100,000 account. Put that into perspective. If we're having 15-hour weeks, 25-hour weeks, sometimes even 60-hour weeks on occasion, put that into perspective, right? Okay, now back to the live example. We have what? Our area of consolidation. Okay, let me just do this real quick. This is a new consolidation, okay? The market sells heavy and then buys heavily, okay? They sell down here, creating all of this liquidity. What do you know? Price creates this in the future. There are two things that the market moves to, and I've explained this in numerous videos: liquidity and inefficiency. Those are the only two things that the market is going to move to. Always. Forever. Okay? The market needs liquidity to move. It needs to take your money to move. It needs to fill in areas where they are negative to move. Smart money, or the composite man, sells heavily here. Okay? Buys heavily to the upside. Creates all of it. You can see how this just goes into exactly what we were saying about retail notions, and how support and resistance is flawed, and how it how you get stopped out all the time. Basically, this is why you get stopped out all of the time. I'm explaining it to you. Creating liquidity all the way to the downside. What do you know? Price taps in to our POI, right? Where is this? I need a rectangle. Okay, anyway, price taps into this POI, right? This little area, the last buy to sell candle. I mean, the last sell to buy candle is your point of interest. Let me just do this, right? You can see how specific this market moves. Okay, this would have been, your entry would have been somewhere inside of these two blue lines. This is the last sell to buy that the composite man needs to come back and mitigate and close out its positions that they lost by negative. Hence why the market comes into this area and starts to take liquidity to the upside that it already engineered days in advance. Okay, so I hope you're able to gain something out of this. This was just a little course. This was a short course to smart money concepts, a beginner's course to smart money concepts, whatever you want to call it. But this is why the market works the way it does. And I just wanted to clear some things up for a lot of the questions that I get, especially from people that are new to smart money concepts. Okay, so if you enjoyed this video, please leave a like, please leave a comment. It means all the world to me. I appreciate all your support in advance. And feel free to reach out with me with any questions or concerns that you have about anything, right? If it's the market, whatever. If it's personal, if it's market, if it's about psychology, trading psychology, your mental, whatever, just let me know and I'll get back to you as soon as I can. I do spend a lot of time in premium. So if it takes me a little while to get back to you, I apologize, but I will definitely get back to you in short. Okay. So anyway, as always, good luck and good trading. I'll see you guys next week.